just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. The GST Council reduces rates on a host of white goods from refrigerators to paints. Sanitary napkins have been exempted from the tax. After drama that lasted for over 12 hours, the NDA government defeated the no confidence motion in the Lok Sabha by 325 votes to the opposition's 126. HDFC Bank missed estimates in the first quarter. Provisions on the bank's corporate bond portfolio proved to be a small drag. And Wipro delivers a strong first quarter. The IT firm guides for a 0.3 to 2.3% revenue growth for the second quarter. And there are a bunch of numbers to watch out for. But let's take a look at the trade setup for the day. First, a recap for all those who are joining in right now as to what happened in Friday. The US markets, they shut shop flattish. Strong earnings growth in the US masked any kind of trade war concerns and comments that came in from Donald Trump. Crude oil ended marginally higher but settled at about 70, and that was the third weekly loss for oil in the last 4 odd weeks. But just take a look at what the US markets did. They ended very, very flat, quite unlike what Europe was doing, by the way. European markets were down about 1%, but US ended flat. The handover is not too bad, and save for the Nikkei, which is starting off about 1% lower, the rest of the Asian markets seem to have a flattish to a mixed nature or texture to themselves. So Nikkei is down about 1%, but the rest of the Asian markets are doing reasonably okay. If you look at the SGX Nifty too, there aren't any kind of big drags that the SGX Nifty seems to be showing in the session. Now, what transpired over the last week and even in Friday's session was that the range that traders seem to be betting on, and we are very close to the expiry now, is between 10,800 to 11,100. So it shifted slightly higher, and that's the narrow band. If you just look at the call and the puts and the maximum outstanding, you'll get a sense of what the options activity is suggesting, and that's 10,800 to 11,100. And what Friday's trade in particular showed that while people may be wary of expensive stocks, companies that are performing or delivering slightly better than estimated, the market is not shying away from buying expensive names. Bajaj Finance, Bajaj Finserv, Sterlite Tech, very expensive stocks, each of these, but they found momentum, found some buying, and in the case of the Bajaj twins, both of them ending at life highs for themselves. So maybe that's the bipolar nature. This week is important. It's about 13 odd Nifty numbers that we will hear this week, and some heavyweights at that. We'll have Larsen and Toubro coming out with numbers on Wednesday. Thursday will be packed consumer day with companies like ITC as well as Maruti coming out with their numbers. And Friday will bring in ICICI Bank during market hours, and then post market hours you will have HCL Technologies and Reliance Industries. So two key names coming out in Friday's session as well in ICICI Bank and Reliance Industries. Saturday brings up NTPC. So it's an earnings heavy week. 13 numbers, Nifty names, a clutch of mid caps and small caps. We are well and truly underway with the earnings season sometime this week. Of course, in today's session also, we'll talk about some numbers, ACC and the likes come out, and GST beneficiaries will be the big talking point about today's session. Most of them will likely react positively today, which brings me to what are the stocks that you should be watching out for in the session today. Well, UPL, not necessarily due to GST, but the Arysta acquisition completed. Brokerages by and large seem to be bullish on Arysta simply because of the way the stock is corrected ahead of the deal. It's trading at a discount to peers. It's trading at a discount to the 3-year price averages as well. All of this mean that if at all people believe that UPL is biting more than it can chew, some of it is probably in the price as well. So let's wait and watch. It's an interesting one. I wouldn't stick my neck out and say which way UPL is likely to react, because by and large, if the stock was trading at highs, people would have shied away from maybe buying it further. But the stock is trading close to lows, so it'll be interesting to see what the reaction on the stock today is. But there are no doubts about what will happen to some of the GST beneficiaries in terms of stock reactions. Paint companies, the unanimous consensus bullish calls that have come in post the rate cuts out here. So Asian Paints, Berger Paints, Kansai, Nerolac, almost all in each and every brokerage has been bullish on the paint companies individually. There's no mention of GST inclusion of ENA. Maybe no bad news is good news. Let's wait and watch if United Spirits, which has corrected a fair bit on this possibility, does react or no. We'll talk more about this. It's not a done deal, but maybe a reaction out there. And interestingly, broadband stocks, and the reason I bring this up on a day when GST is taking prominence is that one, GPTL Hathway, the promoters have acquired about 53,000 shares on July 19, so that is one interesting mover. And Hathway Cable, they've announced that they're going to raise 100 crores via preferential allotment of equity shares to promoters, and which is the other bit why I thought it was interesting to highlight these beaten down names in today's session. Maybe, just maybe, smart money, which is the promoter money, is moving into these stocks after the vicious correction that we've seen into these names. And then, of course, we'll watch out for SpiceJet, wherein there is corporate news. Jubilant FoodWorks, there is talk of the Director General of Foods, I believe, has said that the company has benefited from profiteering. Speaking of that, Nitin Gadkari, I think in a parliament sometimes spoke about how cement companies might be asked to get into essential commodities as well as cement if the companies don't stop cartelization. So lots that's happening in and around, and lots of stock reactions today. So let's wait and watch what happens. But amidst all of these reactions, what are the most important ones to watch out for? That's what we bring to you on First Word today. The GST rate cut on over 50 goods is expected to boost demand in a slowing economy. We discuss the impact with Soumya Ghosh of SBI. UPL will acquire Arysta Life Sciences for $4.2 billion. Yash Upadhyay will take us through the pros and cons. HDFC Bank may have not lived up to analyst estimates in the first quarter, but how does it stack up against its closest peer, Kotak Bank? Shraddha Bavla will tell us. And Darshan then puts into perspective or puts together the early trends that are emerging from the earnings season. However, start off with the GST Council's decision, which has cut tax on over 50 goods, including washing machines, refrigerators, vacuum cleaners, paints, cosmetics, while sanitary napkins have been exempted. The move is expected to hit the government revenue slightly, but boost demand. In fact, comfortable revenue collections and a slowing economy could have prompted the council to act. Let's discuss the economic impact with Soumya Ghosh. He's Group Chief Economic Advisor at SBI. Joins us this morning on IndianOpen or on First Word. Soumya, good having you. Thanks so much for taking the time out. You know, we've been waiting for the impact of demon to get over and then the impact of GST to get over and the higher rates to come off before we finally see some bit of boost to demand. Do you think moves such as the ones that were taken over the weekend have the potential or have the power to give a leg up to the flagging demand?
Yes, good morning. Yes, I think this is a good and smart move because this comes just 2-3 months before the festive season is supposed to kick off in October. So it will actually give the companies the freedom to pass on the price cuts to the consumers. And given the fact that it works with a lag, so from that point of view, it's a good step. And also the fact that the rural economy is now on the mend, and maybe some more steps on the rural economy side apart from the MSP hike could supplement the GST Council recommendation which came through in the weekend.
Interesting. So, there are two more aspects. One is what it does to the slowing economy and whether some moves like these could have. So, I believe you are on par with that perspective. What about revenue collections and procedural issues? Let's start off with revenue collections. What do you expect there? The by and large estimate would be that revenues would be hit, but would a higher demand partly negate the loss in revenue?
Yes, I think that's the entire mathematics and the assumptions the government is actually gunning for, because if you also look last time when the rate cuts were implemented in December, I think there was a temporary dip in the GST collections, and then the GST collections started to bounce back. As of today, I think the GST collections are hovering in the range of 90 to 95,000 crore. So we may see a little amount of dip from that number, but given the fact that the overall run rate for the entire year is, the government is estimating around 1 lakh crore, I think it could again get back to that, creep up to that number at a later date. But as of now, I think this move is supposed to increase compliance, and it will be purely a volume game through which the government expects that the GST revenue should shoot up. But you can expect some amount of dip in the short term.
Term, by December or by March, you would expect the revenues to come back to normalcy? I mean, by normalcy, I mean the current levels or closer to the government target. You think that is a reasonable estimate or an optimistic estimate?
I think that should be a reasonable estimate. I will not call it an optimistic, but I should call it a reasonable estimate that the GST collection comes back to the trend growth in the third quarter of the current financial year.
Interesting. Soumya, how do moves such as these or the ones or one or two that have been taken or could be taken going ahead as well, considering we are nearing the election season and the impact that such moves could have on the overall revenue estimates for the government? Because we all know that, I mean, the fisc estimates were anyways revised in the budget last year, and considering the 12 months would see fair amount of government spend plus some, well, populist stroke realist moves like the ones that have taken on Saturday. What does all of that do to the overall math?
See, the fiscal deficit estimates for the current year are already a little bit on the ambitious side, even though the assumptions which have gone on to the numbers are reasonable. But I think that these steps which are being taken in between, and I also expect that some steps could be taken on the agricultural side, because the MSP is not going to complete the O's of the rural sector. I think some more steps like the price deficiency schemes could be in the offing. So if I consider, and also these Ayushman scheme will be rolled out. So I think there will be pressure on the fiscal, and also these GST giveaways could some more pressure on the fiscal side. But as of now, I don't think there is too much, the government is too much worried on the fiscal front, because the final budget for next year will be presented in July only. So the final numbers, when you come out for what was the collections this year, what was the deficit of the 3.3%, that will only get to know when the new government is thrown in July. So from that point of view, the government may not be too much bothered about some sort of a fiscal lega at this point of time.
Okay, Soumya, we'll leave it at that. Thank you so much for taking the time out and joining us and giving us that perspective. Really appreciate your time. So Soumya Kanti Ghosh, they're believing that after an initial dip, we'll probably see normalcy return to GST collections as well. Just a very quick mention of stocks or companies that could be impacted. Now, we've broadly discussed this, but for the benefit of the people who tune in right now and wanting to know, Kotak on their talks on the GST changes say that this is positive for Asian Paints and some of the other companies, but they've mentioned Asian Paints in particular. They believe this is a meaningful kicker for all the paint companies and would drive about a 10 to 15% earnings upside for the paint companies on an annualized basis. So while this year will not see the full upside coming in, for the next year they believe a 10 to 15% upside due to purely this price cut alone. So that's Kotak on GST. In fact, Abhijit Roy, the MD and CEO of Berger Paints, did mention that they will instantly reduce the prices of paints by about 10% which will probably lead to a volume boost that comes in for all of these companies. So do watch out for the paint companies. Then Kotak has come out with a note on ITC. They believe that there's a modest revision would actually have been a better outcome. The risk of the punitive revision in the next council meeting does remain for ITC. So that's the other one. And last but not the least, while we'll hear out the spokesperson from Vijay Sales a bit later on in the show, Nilesh Gupta on Saturday did mention that this year the sales growth were flat to low single digit for consumer durables. Now that the GST rates have been lowered, sales growth can move up to 8 to 10%. So that's the third voice that is coming in on consumer durables. So in the pecking order, I think paints, consumer durables, and then maybe stocks like United Spirits could well be in focus in the session today. Don't reckon that there'll be material changes to the oil marketing companies as a result of what's been done to ethanol, to be honest. Now that's as far as GST goes. The next piece on first, what is UPL? It'll acquire agri-pesticides maker Arysta Life Science for $4.2 billion. The all-cash deal will create one of the world's largest crop protection companies. Yash Upadhyay is standing by with the deal synergies and some of the concerns that have cropped up. Yash, good morning.
Good morning, Neeraj. After months of going back and forth with reports, finally UPL on Friday confirmed that they would be acquiring 100% stake in Platform's agrochemical business, which is Arysta Life Sciences, in an all-cash deal worth $4.2 billion. Now, they will fund this acquisition with about $1.2 billion in equity infusion coming in from Abu Dhabi Investment Authority and TPG. So both of them would invest close to $600 million each to acquire a combined 22% stake in their international arm, which is UPL Corporation. The remaining $3 billion would be through a debt funding from MUFG Bank and Hong Kong's Rabobank with a maturity period of 5 years. Now, they expect the deal to be completed by the end of this calendar year or early 2019. Well, the deal is a big positive when it comes to UPL, as it would create the world's 5th largest agrochemical company with combined sales of almost $5 billion. Also, the management is targeting annual synergies to the tune of $200 million from FY20 onwards. When it comes to Arysta, well, they have a much richer product offering as compared to UPL, with specialization in wheat along with fruits and certain vegetables, which complements UPL's own product portfolio and also has a much wider reach. So it is present in 100 countries along with strong presence in places such as Eastern Europe, Russia, Middle East and Africa, which UPL is as compared to Arysta quite weak. Also, UPL benefits from forward integration, as Arysta is more focused on formulation and the development of molecules, while UPL is strong in terms of manufacturing. But with every deal, there are a few concerns that the street and the analyst community have. So the first is that although the management has guided for revenue synergies to the tune of $400 to $500 million from FY21, if it takes longer than that, then it would have a significant bearing on their financials. Also, the $3 billion in debt, that would increase the net debt to EBITDA from the existing 0.7 times to 3.1 times initially, which the management hopes to bring down to 2.5 to 2.7 times once the synergies kick in. Also, any slowdown in agrochemical demand, that would be a big negative for the company. As we've seen in the past, Arysta has seen some headwind, some tailwinds in its key markets, with revenues growing by about a mere 4% from calendar year 15 to calendar year 2017. When it comes to brokerages, they have given it a big thumbs up. So CLSA has maintained the buy rating on the stock with a target price of 940. All of them believe that the deal would be EPS accretive. So they believe that it would be a positive, and also the recent correction means that the stock is trading at a significant discount. Emkay has maintained the buy rating on the stock, but have cut the target price to 773 from 923 earlier. The big overhang being the high leverage, and also Investec, they maintain the buy rating on a stock with a target price of 785. They believe that the deal is likely to be value accretive, and also the synergy realization can result in significant upside. Back to you.
Okay. Let's wait and watch. It's very difficult to preempt what UPL could do at the start of the trading day today. Remember, as I said, the stock has corrected quite a bit in the run-up to the event. Let's wait and watch if there's a bit of a pullback. Yash, thanks for putting that into perspective. The other big set of numbers that came out on Saturday was HDFC Bank. They posted the slowest profit growth in 5 quarters after the private lender accounted for its entire mark-to-market loss on investments in the last quarter. What's encouraging, though, is stable asset quality, which shouldn't surprise anybody. Shraddha Babla is here to take us through the key takeaways from HDFC Bank earnings and then compare it to arguably something that it can be compared to. Now, Shraddha, not too many players which deliver such growth, but first let's talk about the standalone numbers. How did the numbers look like?
Okay, Neeraj, I'm going to summarize the numbers in 5 pointers. First, the net interest income growth of 15.5%, that missed analyst estimates, and that came in at a multi-quarter low. That was again on account of the decline that we've seen in the net interest margins. But again, analysts believe this is a function of the lagged effect of the MCLR price hikes that were taken. So that led to the net interest, the net profit coming in at sub 20%, of course, thereby missing analyst estimates. Why did that happen? Well, a large part of it has to do with the big MTM loss that the bank recognized during the quarter to the tune of 391 crores. So they chose to upfront this recognition instead of spreading it over a 4-quarter period as allowed by RBI. Now, when it comes to the business momentum, loan growth continued to remain strong at about 22% above industry average. And finally, when it comes to the asset quality number, we did see a small spike of 3 basis points, on a Q-on-Q basis to about 1.3%. So overall, Neeraj, I would say they, while there was a miss as far as the bottom line numbers are concerned on account of MTM hit, otherwise the operating metrics continue to remain steady.
Interesting. Okay. And so the moot point is, Shraddha, barring the one-offs, how does it compare with whoever you can compare HDFC Bank with.
Right, so we have done a comparison with Kotak. So if I'm again going to divide it into multiple points. First, if you compare the growth aspects, if you look at the profit growth for HDFC Bank and Kotak Bank, both in this quarter, they saw a miss, and it is the MTM loss on the bond portfolio again for both, which is to be blamed here. As far as the loan growth is concerned, it continued to remain above industry average for both, but the trend here was divergent as far as the behavior or growth of the retail and the corporate books were concerned. So for HDFC Bank, retail growth lagged corporate book growth in this quarter, which actually made a comeback from a single-digit growth of 9.4% in the previous quarter. For Kotak, it was the contrary, where retail book fared much better than the corporate. As far as the asset quality numbers are concerned for HDFC Bank, they trended upwards from 1.30% to 1.33%. In fact, the management has also guided for a 1.3 to 1.5% sort of a range where they believe NPAs will settle down. So the trend is upwards, whereas for Kotak Bank, this is one of the few which is actually seeing a downtick as far as the gross NPA ratio is concerned. So you saw 5 basis points decline for this one. So that's again where the difference lies marginally. Also, some difference as far as the management's assessment of risk for the SME portfolios are concerned. So while Kotak did say that they have made significant provisions on the SME business banking book for the quarter, and that there was some more pain likely to be seen going ahead, HDFC Bank said that it was the agri portfolio which was concerning. They did see some spike as far as the agri NPAs are concerned in this quarter, some of it to do with seasonality, but when it comes to their assessment of SME book, that grew at 24% for the bank, and they seem fairly sanguine about the quality of the business banking book, unlike what we've seen for Kotak Bank. And finally, when it comes to the next set of triggers, it's HDFC Bank's capital raise of 24,000 crores, which is going to be watched out for. And as far as Kotak Mahindra Bank is concerned, you have this planned promoter reduction that the RBI mandates. So there, Kotak has to bring down the stake from the current 30% or so to 20% by December 2018. Some do believe that that can be achieved by some large acquisition. We don't know if that will happen, but those are the two things which will have an impact to drive the stock, two stocks over the next few months.
Okay, let's wait and watch, Shraddha. Thanks for putting this into perspective. HDFC Bank, I really doubt it can have a big major reaction which can sustain, but let's wait and watch. Funny things happen. That's one Nifty name that could react, in addition to Wipro, which is likely to react marginally as well. But keep in mind, I think IT companies ahead of the numbers have had a bit of a leg up to Wipro in particular. So let's wait and watch how does it react to its numbers, which, well, didn't disappoint, if I can use that term. However, speaking of earnings, Q1 earnings, about 12 Nifty companies have come out with the quarterly earnings thus far, and 13 come out this week. But what about the 12 that have already released their numbers? Darshan has done an analysis of the early trends visible in the numbers that have come out thus far. Darshan, good morning.
Good morning, Neeraj. What we're seeing, the early trends do indicate that it's not been the best of quarters. 3 companies have reported strong numbers, 3 have reported weak numbers, and the number of companies reporting inline set of numbers have actually gone up. But more importantly, the numbers that were on the weaker side were high, companies with high weightages on the Nifty, like an HDFC Bank. So that probably is weighing in on the EPS estimates that have been cut, but we'll get to that. Now, if you're looking at the trends currently, it's been, the number of strong companies compared from last quarter has come down drastically. This is the first 12 companies that have reported, and the number of companies that have reported weak numbers have also gone up. So compared to what we saw last quarter, the numbers are not, seeing a lot of encouraging trends at this point of time. Now, this is what has happened. TCS, Bajaj Finserv and Wipro have managed to come out with numbers which managed to beat the street estimates, while IndusInd, Infosys, Zee, HUL, Bajaj Finance and Ultratech came out with an inline set of numbers. Bajaj Auto was punished 10% yesterday on Friday given the weak set of numbers it has. Kotak managed to disappoint, and today probably we will see the reaction that will come in to HDFC Bank, which also came out with numbers on Saturday, and it was disappointing on the first quarter numbers. Now, basically, if you're looking at some of the companies that have beaten the street estimates, the big one was TCS. A lot of new deals happened. The BFSI structure vertical did well. The management commentary on the BFS vertical was very, very strong. Cost control was seen. Currency tailwinds was clearly there, and that encouraged the TCS to come out with a strong set of numbers. The second company to report strong numbers was Bajaj Finserv. Bajaj Bajaj Finance was in line, but the other businesses did well. The general insurance and lending business, which is Bajaj Finance's, that did well. The life insurance business was under pressure for Bajaj Finserv. And the third company that reported strong numbers was Wipro. There was recovery as it was in TCS, recovery in the BFS vertical. IT services revenues are higher than what guidance was higher than the estimate. So Wipro probably will react positively to its numbers. The ADR ended up almost 2% in trade. What missed was Kotak Mahindra Bank. Jump in provisions hurt the bottom line. GNPA ratios is improving marginally, and there was robust growth. But on the financial side, it was a disappointment. The second company that managed to disappoint was Bajaj Auto. Rising commodity prices and a weak product mix impacted the numbers of the company, and price cut also impacted margins of the company. And the last company that reported numbers, and Shraddha speaking much about it, MTM losses dent the bottom line, and the net profit growth falls below the street was anticipating 20%. So what does this mean as far as estimates are concerned? So basically, when we started 1st April, this was the number as per what Bloomberg Quint calculated on 1st April. It was 134.8 at the start of the first quarter. So this is before IndusInd Bank and TCS released the number. It was already cut by close to 10% from 134.8 to 123.7. So the feeling that the street got was that earnings was expected to be weak. As of today, this number has slipped below to even close to 121 currently. And the EPS so far is 35 rupees, which is close to 20%. So the first 12 companies have reported just 20% of the EPS earnings, and some of them include large caps like, HDFC Bank, Kotak Bank and TCS. So we'll be tracking this number. This is very important that, the estimate was 135 brought down to 123.7. So we'll keep 123.7 as the benchmark, and we'll try to see whether the Nifty companies manage to meet this mark at the end of earnings season, and we'll keep track of how they're faring as of now.
Well, let's wait and watch. Darshan, thanks for putting that into perspective. As we said, 13 Nifty companies coming out numbers this week as well, so should be an important one. Remember, every Monday we'll get you this tracker and tell you what the Nifty has done thus far, so it'll be interesting to watch for sure. However, that's all that we have on First Word today. It's a packed day of trade though, and lots more lined up on IndianOpen. We talk about how the GST rate could boost consumer durable sales with Nilesh Gupta of Vijay Sales. He's got his eye on the consumer pulse, so it'll be an important conversation. We'll discuss the June quarter earnings for L&T Finance with Managing Director Dinanath Dubhashi. And after this quick break, a full tilt towards the day's trade. Stay tuned to Bloomberg Quint Live.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you. Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Welcome back. You're still watching Indian Open with us on Bloomberg. Quint, let's quickly do a check of what the Asian markets are doing currently. Well, Nikkei is opened on a very weak note this Monday morning, down almost 1.3% as we speak. And the trade for Shanghai is almost just about trading higher by 6 to 7 points. Hang Seng too witnessing a downtick of nearly 40 points. Well, SGX Nifty currently showing a very flat start for our markets. Remember, whole host of news factors will be playing a critical role in today's opening on back of earnings, GST rate revisions, and also some earnings which will be coming out in today's trading session. But looking at the technicals, what's happening in the futures and options market, we closed above the mark of 11,000 on Fridays. So let's check what sort of cues we are getting from the derivatives market. Over to you, Agam.
Well, thanks for that, Navneet. Of course, when it comes to the futures, we do know that we see some strength come through, and we are entering the expiry week, and we started to see a little bit of a rollover pickup. Not too much to speak for. However, when it comes to the July futures, we've seen a little bit of an addition towards fresh longs, even as the underlying moves up by as much as 0.5%. Let's bring in the Nifty Bank futures as well and see how that's panning out. Again, about a 0.3% advance there, but declines in the July OI. However, we've seen a substantial addition in the August open interest. So again, some amount of longs building up in the further series. Now, when it comes to changes in open interest, at least as far as Friday is concerned, once again, it was the 11,000 call and the put, and 11,000 mark, which saw a lot of activity. Unwinding in the 11,000 call, considering the Nifty moved back above the mark, and more writing around the 10,900 and 11,000 puts. So watch out for these levels as we move to trade today. And with that, we take a look at the open interest distribution, which at this point in time continues to be with somewhere around the 11,000 put. Now, this is a really curious one, because the next one is around 8,000, about 10,800 and 10,900 puts. So these are the levels that you know, a lot of these traders are working on at this point in time on the lower end of things. Of course, on the higher end, it is the 11,100 call that we'll be watching out for. That said, in terms of the put call ratio, that continued to edge up higher at around 1.71. And in terms of a few stocks that I'm watching out for, Bajaj Finance, of course, is one of them. The biggest gainer on the Nifty last Friday, up as much as 8%, 5% added in open interest towards longs. Other than Bajaj Finance, we're watching out for Seat. That also moved up 8%, so longs coming in there as well. And finally, we also have Indian Bank. That's on the losing end, 20% added in open interest towards fresh shorts. So a lot of stocks out there to watch out for. Plus, don't forget, we've had a bunch of news come out through the weekend as well. So we're likely to see some F&O traction coming in some of those stocks as well.
All right, Agam, thanks a lot for bringing those cues from the derivatives market. Remember, 11,080 now is a big resistance. So that's the recent high that we've seen on Nifty. Once that gets crossed, probably we'll be eyeing the all-time high levels that we've seen of 11,171 on Nifty. But moving away from that, there are a whole host of companies which will be in focus on back of GST rate revisions. Washing machines, television and refrigerators are set to get cheaper. The GST Council on Sunday moved nearly 50 such products in the 28% bracket to 18%. How sweet is the rate cut for a company like Dixon Technologies, which is one of the leading contract manufacturers for consumer durables in the country? Joining us now on the show is the Managing Director, Mr. Atul Lal, to give us an update. How does this rate revision impacts his company? Hi, Atul, good morning to you, and thanks a lot for joining us this Monday morning. Good news for a company like yours. I'm keeping it very simple. Tell us, how does this impact your rate revision from 28 to 18% on a couple of white goods items? How does this impact your earnings going ahead?
So I think it's a extremely positive step taken by the GST Council and the government. It makes the products in which Dixon is a leading contract manufacturer, namely televisions and washing machines, much more affordable. So I'm very sure that the growth in the numbers and the volumes are going to kick up in the near future, which has a significant positive impact on Dixon. I'm very sure that our customers, our anchor customers, are going to significantly gain from that. It's going to further enhance the penetration of these products in the semi-urban and the rural areas. It's going to make them much more affordable, because 10% is a very significant number.
Atul, definitely this will lead to volume growth going ahead in the subsequent quarters, but you'll also be passing on that impact of price cut to the end consumers?
Yeah.
So net, it will be a positive impact.
Yeah, so all that is going to be passed on to our customers, who I feel in turn are going to pass on to the end customer. So as far as the margin is concerned, I don't see a margin expansion on a per unit basis taking place. But it will be a significant booster to the volume growth.
Good morning. Vijay's sales on Saturday, when they spoke to us, mentioned that this year the sales growth by and large for consumer durables, not necessarily only for the products that you contract manufacture, were flat to low single digit. And now that the rates are lowered, we can probably expect the sales numbers hitting the double-digit mark for the rest of the year. Is that a reasonable estimate?
I think it's very reasonable. Now, let's see how it actually pans out. But I think what Vijay Sales has stated is an absolute fact.
By any chance, any conversations that you've had post, I know it's early days as yet, and it's all just conjecture. We don't quite know what will eventually happen. But have you had any conversations with any of your key clients about they sounding much more optimistic about this, and thereby over a period of the next 3 to 6 odd months increasing the orders from a company such as yours?
Well, I've not had a one-to-one interaction with the management of my customers yet. And what you were saying is absolutely right. This is an expectation, a positive expectation. How it pans out, I think I'll come to know in the near future, in a week or couple of weeks, that how do my customers do their forecasting and planning now with the prices falling. But overall, one feels that it's a significant positive step for the industry.
Atul, just a last question from my side. So the current rate, the current revised rate, how does that stand with the rate that you were paying in the pre-GST era? Is it in line 18%?
Well, in the pre-GST era, the VAT rate on consumer durables was varying between 12 to 15%. And the effective rate of excise duty, because it was MRP based under Section 4A of Excise Act, it was somewhere between 9 to 10%. So it's a 12.5% with certain abatement. So the effective rates then were somewhere between 23 to 24%. And in the post-GST scenario, these rates went up to 28%. And now with the revision, the rates have come down to 18%. However, in our sector, in the product in which Dixon is specifically, so washing machines definitely goes down. In the case of televisions, it's only up to a particular size, which is not a very major share in the overall television sale. So there is a limited gain on the television side. Refrigerators definitely, but at present Dixon is not into refrigerators.
Okay, Atul, we'll leave it at that note. Thanks a lot for joining us and taking us through that impact that a company like yours can have with the GST rate revision that we've seen on a whole host of white good items. But let's also bring in our guest and get his views on GST revision. Kalra, founder at Target Investing, is right here with us in the studios. Hi, Sameer. Good morning. Well, there are a lot of stocks which will be reacting to earnings on Deal, UPL, and also GST revision. Let me just take forward the consumer durables topic first. What have you made? Paint companies, GSTs come down. You've got a whole host of consumer durable items where the rate has come down. One thing is clear, volume growth is going to go up. They will have to pass on the price impact to the end consumer. He also mentioned that there will be no margin expansion. So how does it impact all the companies?
See, if the volume growth has to come up, margin has to expand, because you are having a factory which is at 75–80% throughout the sector being utilized. So any volume impact will lead to a margin expansion, because you're already taking fixed expenditure of the spare capacity. So any incremental capacity being utilized, your margin has to expand in the percentage terms. Over here, what has happened is the tax rates have been rationalized, right? Now, as he said, around 24 was already into the factor. Now it's come to 18. From 28 going towards 28, now 18. How this impacts the volume, I would really like to give it a 3 months, because what happens initially, a lot of inventory is there at the dealer network also. So that has to take a hit. because if the MRP plus the taxation was the amount paid by, generally dealers pay a discount on the MRP when they purchase from the manufacturer. So that inventory rationalization, how it takes place at the manufacturer level and at the dealer level, that is important for, at least internally, for us to assess whether the volume growth will come up that drastically. Because if you remember, now the base is higher. Now GST impact, demonetization impact is already in the base. So this July onwards, you'll have a full demon GST based into the base. So to have that kind of a volume growth what you had previous year, and over that to have a double digit will be a little tougher, which I think, because the only point is 10% cheaper won't make me buy more. These are not goods which I can store more in. Yeah, replacement might come. Replacement might come in quicker. So I think there is still a lot of ifs and buts to generalize into that volume growth kicking in.
But what about the fact that paint companies, for example, the whole unorganized to organized move because of the rates coming off will probably see a bit of a leg up.
Yeah.
And let me, part to my question would be, so in light of all of this, what do you have, or have you turned bullish on any of these GST rate cut beneficiaries post Saturday's move?
So will not turn bullish just because of tax rates have changed. They can go up also once if some deficit comes in, right? As in, that's very the only point is that's very unlikely. But certain times when you play on the tax rates, it becomes difficult to assess how these tax rates will actually impact the company.
Okay.
Because they themselves might be assessing right now. So I would rather give it a quarter. So maybe a September end result might define you how these impacts have actually affected them, and then take a call of how it makes us bullish or bearish or remains the same for us.
Okay, maybe that's a fair call too. Give it some time, don't do a knee-jerk reaction, though we might see some knee-jerk reactions from the trading community early morning today at 9:15. We'll get to know about it when we get to know about it. However, it's not just all GST, there are a bunch of other stocks, excuse me, which are in news, earnings, newsmakers, some brokerage reactions. So let's talk about all of those with our research team on our research huddle. Nikki and Shraddha join in to talk about all the key beneficiaries, if you will, of some good numbers, maybe some stocks in news and more. Both of you, good morning. Shraddha, let's start off with you.
Yeah, I'm going to start off with good numbers because that's what will be dominating the stocks that will react as well. I'm going to start off with Wipro. Inline sort of numbers, revenue growth of 3.4% sequentially. EBIT went up by about 20%. EBITDA margins expanded by nearly 200 basis points, and net profit growth of 16% or so. So again, inline numbers, they have given a guidance for the IT service revenues to be in the range of $2,009 to $2,049 million for the second quarter. So that seems to be slightly on the higher side than what the analysts were estimating. You also had a strong set of numbers from L&T Finance Holdings. You had net profit growth of about 59%. The gross NPA came in at 7.93%, and the AUM growth in the focused lending business came in at 27%. So strong numbers there. MCX also we saw a strong set of numbers. Revenue growth of 24%. However, net profit declined by 77%. That's on account of an exceptional loss of 24 crores during the quarter, because otherwise, if you look at the operational performance, EBITDA has doubled to 26 crores. Bhagira Industries is next on the list. Again, a commodity chemical player. Revenue growth of 28%. EBITDA has more than doubled to 30 crores, and net profit is up from 5 crores to 17 crores. So a stellar set of numbers, largely on account of better realizations in the chemicals business. Sheshashahi Paper and Boards, revenue growth of about 9%, EBITDA growth of 19%, EBITDA margins expanded by about 50 basis points, and net profit growth of 23%. So all of these should possibly see a good reaction.
Yeah, well, the market sentiment might also aid that. But Nikki, it's not all good news this Monday morning, is it?
Just two of the numbers which have come out with weak show. I'm going to start off with South Indian Bank, which has reported weak set of numbers. NII grew as much as 7.3% for this bank at a number of around 494 crore. NIMs have declined to 2.6% in this quarter as compared to 2.8% in June 2017 quarter. Net profit for the bank has also come down by 77% year-on-year basis, mainly on account of the lower other income, which has declined as much as 33%. And also the NPA, the gross NPA for this company stood stood at higher at 4.54% as compared to 3.5%. Unamortized gratuity expenses along with the MTM losses has mainly weighed down on the bottom line performance of the company. The second set of number, weak set of number, will be Reliance Power, which has registered a 30% decline in the revenue of around 2,285 crore. Also, if you look at the EBITDA performance, that's down as much as 6.5% for this counter at a number of around 1,089 crore. Margins, however, stood at 47% as compared to 44%. And if you look at the net profitability, it's a flat figure there, 237 crore as compared to 230 crore. Also, we're looking at lower PLFs for one of its solar plant in Rajasthan along with the wind capacity in Maharashtra. Probably that's way down on the performance of the company.
Thanks for that, Nikki. Agam, what do you have for us?
Well, I have Just Dial and Bata. So I'm going to start off with Just Dial because we've seen very strong earnings for Just Dial. 11% growth on its top line, with margins expanding to around 27% as against 17% year on year. And net profit has also risen by as much as 7.8%. 0.8%. Now, the reason behind the growth that we've seen in Bata is essentially the realizations, which grew 4% quarter on quarter. Also, 25% growth in unique visitors. That's something that's been aiding Bata. Do remember, our quarter has been just as strong when it comes to Just Dial, even in the previous one, and this is just a continuation of that trend. That said, another positive factor that we're going to keep an eye on as far as Just Dial is concerned is the buyback. Where the buyback has been announced at 800 rupees per share. This particular stock is currently trading at less than 600 rupees per share, so it is likely to see a further up move in that impetus that's going to come through. The buyback is for around 27 lakh shares, and the entire quantity comes down to around 4%, a little over 4% of the entire equity, and the buyback is worth around 220 crores. Again, when it comes to Bata, another strong set of earnings coming through. We've had again a lot of volume traction from Bata, considering the fact that we've seen a lot of this advantages from the unorganized sector come through. So when it comes to its numbers, we're seeing a 7.3% uptick on a year-on-year basis. Its margins expanding to 16.5% against 13%, and its net profits growing 37% year-on-year. All the three numbers coming ahead of consensus expectations. I've already spoken about the advantages coming on account of the unorganized sector. But we also seen new launches and stores come through and regional campaigns which are playing out in favor of Bata. So, well, good numbers coming in for Bata too.
Hey, thanks for that, Agam. Okay, so some interesting numbers out there as well. Samir, Bata India, out of all of those that came out, and a bunch of them, Bata somehow the operational picture and otherwise looked fairly good. What do you make of what should an investor do when it comes to Bata?
So I think valuations have run up same time as well as the operational matrix is improving. So I think now is a time you don't want to enter and feel that the same kind of a performance stock wise will come in. Yeah, operationally the incremental performances will help out, and in the consumer sides we are much more cautious on the base year becoming a full base effect getting into place. So I think there has to be a 1 quarter or 2 quarter performances which you have to assess before taking a long-term call on the same.
Samir, the numbers definitely looked good, but there was also GST revision in the footwear space where 5% has been increased to almost 1,000 rupees. Tell us, will this move be more beneficial for players like Liberty and Relaxo? Because Bata, I think in the last few quarters has been focusing on premiumization.
Yeah, so this will affect much more on the Relaxo. Even Liberty, I feel it's above that 1,000 to 1,500 range kind of where Liberty pushes it up. For Relaxo, generally the ASP is around 800, 900, if I'm not wrong. Now Bata goes beyond that. Now they are planning, as more premiumization takes place, the percentage of your volume is being pushed towards above 1,500, 2,000 kind of a MRP basis. So I think this will be less benefit to Bata and Liberty than more than Relaxo.
Okay, let's get in our technical experts on board now. Hadrien Mendonca, Senior Technical Analyst at IIFL, with us on the show, as is Ruchit Jain, Technical Analyst at Angel Broking. Gentlemen, both of you, good morning. Thanks for joining in. Hadrien, how are you approaching trade today? We're likely to start off on a flat note. what would be a prudent index strategy for the morning?
Yeah, hi, good morning, Neeraj. So, as far as the index is concerned, the overall setup, without a doubt, still looks pretty positive. As far as the Nifty is concerned, last week saw, a 200-point consolidation, wherein, the resistance level was close to 11,080, 11,100 zone. Whereas on the downside, 10,009 and 10,920 acted as an important support. So what has happened is the last week consolidation has aided the Nifty to actually form a flag pattern. Now, if we see, flag patterns when they are formed, they generally turn out to be bullish. And the best case scenario for the Nifty here would be a break above the 11,080, 11,100 zone. Once we see that happening, I think the projection of the flagpole is actually coming to another 500 points on the upside. I'm very hopeful that this flag pattern actually unfolds the way it should, because if it does, then we could see very good up move on the Nifty. As far as the Bank Nifty is concerned, the daily chart does not actually show a flag pattern like the Nifty is showing. Whereas, the cause of concern on the Bank Nifty is the doji pattern that we have seen, on the weekly charts. That's not a good sign. Signs of uncertainty setting in. If you see the constituents, even, the likes of the HDFC twins have started consolidating and stopped moving higher. In fact, HDFC Limited saw 3 days of downfall in the past week as well. ICICI Bank is not doing that great. If you see, Axis Bank is also struggling and consolidating. So I think as long as the Bank Nifty is concerned, I think we'll have to see these heavyweights to actually start participating if we're going to see a good up move over there. The interesting point here is the mid caps and the small cap space. In the past 4 days, we have seen the index not falling, and the index not falling means that we have entered into a consolidation phase. Whether to start getting into the broader space at the current moment is a big question to be answered. But definitely we are seeing some short-term green shoots on both the indices. So the broader indices should be a space to watch out for going forward.
Okay, Ruchit, what's your view on the index? Will you be taking any trade today?
Yeah, hi, very good morning to everyone. Well, yes, we have seen that during last week, the entire week on the index front it was a consolidation phase. But broadly, nothing has changed as far as trend is concerned. The high top, high bottom structure since continues to remain intact on both the indices. Secondly, recently we had seen a breakout above this 10,900 resistance, which is still intact. Even on the options front, if we see the put writing is getting shifted on the higher strikes. Now 10,800, 10,900 has also been adding a very good amount of open interest. So the support bases are shifting higher. Now 10,900, around 10,900, 920, there's a good support for the Nifty index. So we are of the opinion that maybe next 1 or 2 weeks we would see markets inching towards its all-time high levels. So at current levels, we are recommending to go along in Nifty. From this week's perspective, keep a stop below 10,920, which is the lower end of the recent consolidation phase of last week. And we expect targets at least around 11,150 to 11,170, which was the highs made during month of January. Secondly, we would know one interesting observation from the mid-cap space. The Nifty Mid-Cap 50 index now looks to be in a process of forming a bottom over here. This index, we have seen a lot of divergence in Nifty as in the large cap and the mid cap space. But now the Nifty mid cap index is trading near the lower end of the channel which it is formed in last 5-6 months. Also on the daily chart, we had during last week seen one of the day where a bullish engulfing pattern was formed, and on the weekly charts it is trading around its 89 EMA support. So going ahead, I think that mid-cap space would show signs of bottoming out, and we would see a lot of good participation, specifically from the quality mid-cap names in from next 1 or 2 weeks.
Okay. Before we get to stock ideas, it's time up, actually slightly beyond time for our special segment Bloomberg Edge. So let's get in Jayesh Khilnani to tell us about a pattern that the terminal has thrown up on a stock. Jayesh, what's the stock on your radar today?
Morning, Neeraj. Watching out for Petronet LNG. That is because 75% of the analysts covering the stock have a buy rating, and their target price is 30% above where the current price is. And also the stochastic indicator has given an early buy signal on the stock with Friday Friday's close. Let's first have a look at the stochastic indicator, how it works, what's the theory behind it, and what are the conditions that you have to watch out for. Well, firstly, it helps you to identify when a price move is overextended by measuring where the current price is in context to the recent high or the recent low that has been formed for the stock. A few conditions that you have to keep in mind: overbought is above 80 while oversold is below 80. There are two lines which get plotted on the chart, and a crossover between those two lines gives you the sense of buy or the sell signal depending on the direction of the crossover. Let's have a look at the chart of Petronet LNG. That's the last 6-month chart, and you can see that there has been a constant decline. But notice that near the 210 mark in the past, the stock has in fact consolidated and given a pullback as well. So we saw that happening in May. Similar situation happened in June, end of June as well, and currently also we are trading very close to the 210 mark. So important level to watch out for. The bottom panel will show you the stochastic indicator, and you can see that the blue line has in fact crossed above the white line, but both of them are below this green line, which means that there could be a potential buy signal. This is just an early indication of the buy setup.
Okay, do watch out for Petronet LNG. Jayesh, thanks for putting that into perspective. There is also a brokerage note. I think UBS has upgraded Petronet LNG to a buy from a sell. The target price uptake is minimal, but never know, it could have a bit of a reaction on Petronet LNG. Okay, before we talk about a clutch of other newsmakers, we still have to take the stock recommendations from our experts, technical experts. So let's do that first. Ruchit, to you first. Your stock ideas for the morning.
Now, first pick would be a buy call in Mastek. On Friday, we had seen the stock had given a breakout from its falling trendline resistance. The broader trend on the weekly chart still continues to be positive. So we are expecting a continuation of the uptrend post the recent corrective phase. So one can go long in Mastek with stop below 500, expecting target around 595. And my second call is a buy call in Excite. We have recommended this in the recent past as well, but even at current level, the stock is showing a bullish picture, and we believe that this uptrend is likely to continue going ahead. So at current levels, also one can add to their positions, keeping a stop below 257, expecting target around 287.
Hadrien, what about you? Your top calls for the day would be?
Yeah, so both would be bullish, and the first is Jubilant Food. I mean, the stock is absolutely on fire. We are seeing a renewed consolidation phase breakout, after consolidating for almost 3 weeks now. And I think one should not miss an opportunity on such an uptrending solid stock. So one can consider, buying Jubilant Food for a target of 1520 and place a stop loss at 1462. Second bullish recommendation is on Tech Mahindra. I mean, the stock is just consolidating, and I think it's on the verge of a very good consolidation phase breakout. Interestingly, we are also seeing good volumes developing in the past 2-3 days. So I think even Tech Mahindra would be a good buy at current levels for a target of 677 and place a stop loss at 650.
Keep in mind, Jubilant Foodworks technically will look okay because it ended at highs, but just keep in mind there is an investigation report submitted by the Director General of Anti-Profiteering to the National Anti-Profiteering Authority saying that Jubilant Foodworks has profiteered by not passing on the reduction in GST. The company will represent its case before the NAA. Something like this has happened in the past too, but maybe this could be a small overhang on what is technically looking a very strong stock. So just keep that at the back of your mind. Had it not been for this, maybe the stock would have performed just as well as Hadrien is saying. Maybe, just maybe, there's a chance that there could be a pause here.
Last meeting, Neeraj, they had lowered the rates to 5%. And for a company like Jubilant, it was not such a positive news because they are not allowed to avail the input cost credit. So the raw material which they source is actually from the regulated players where they have to pay GST. So I think that was the factor which was playing about, and hence the reason why we did not see the prices coming off that sharply when the GST rate was reduced from 18% to 5%.
Yeah, but we all know nowadays what's happening, right? With a clutch of moves, some of them may seem rational to some people and irrational to a lot. So just this overhang, nothing else. Just from a trade perspective, fundamentally, if the case is presented, you never know what will happen. But just from a trading perspective.
And the earnings too come out this week, I guess. So.
Okay, yeah, so that's important too. Okay, the other set of stocks, I mean, this ethanol rate being cut, Samir, does it have any material impact on either the OMCs or the sugar companies?
So there might be a reduction in the purchasing costs of OMCs, but the impact on the real sense and a bigger sense, I don't think so. Additional impact will be there. Yes, sugar stocks might see a technical bounce today or just because of the news bounce, but that doesn't add to the fundamental issues they are running with right now.
Okay, so that's the long and short of it. Jubilant Foodworks, oil marketing companies, sugar companies, watch out for the paint companies, Navneet. Yeah. And then the result reactions. I thought MCX was an interesting one. I don't know if you got a chance to look at it, but I thought
I saw the operating performance. There was margin expansion, and because of a one-off item, the bottom line was muted this time around, but the numbers definitely looked good. Let's see how the stock
after reacts. A long time.
After really long time. Yeah, and plus there's a lot of news also surrounding with the merger of NSE and MCX. So probably they could be launching a new platform collectively for Universal Exchange. So let's see how the stock reacts. But definitely, I think at the operating front, the numbers look pretty good.
Yeah, well, let's wait and watch. Any quick thoughts here, Samir? Do you track MCX?
So we have a certain portion invested in MCX, but that's really small right now because we are seeing on the volume growth and all these news creating a valuation premium as of now. So we were heavily invested at the crisis time. Then we reduced as the prices moved up. I think now it's more of how that actually materializes because NSE is having its own trouble. So I think merger will be a very difficult situation for SEBI to approve as of now. So I think rather giving out that premium, I think operational wise, I think I rather wait for a couple of quarters.
Okay, actually we'll have to wait for the the real reaction to come in because there's a lot of news flow surrounding NSE as well as MCX. But I just want to get a technical check going very quickly before the pre-opening session. Hadrien, very quickly, how is IGL looking on the charts right now? Just 30 seconds to go. If you could give us a support and resistance level there.
Yeah, so in fact, IGL would be one of the picks that I would choose if you would ask me later, pick of the day. So IGL is definitely looking pretty strong, and I think I'm seeing a falling wedge breakout on the weekly charts, and I think I'm seeing targets beyond 300 levels for IGL. So yeah, definitely buy at these levels.
Okay, buy at these levels, and you'll be getting the pre-opening rates on your screen right now. SGX Nifty this morning has been suggesting a very flat start, but remember there are a lot of reactions to be seen with regard to GST revisions. Also UPL, let's see how that one pans out. But Nifty right now is showing an uptick of nearly 4 points. These rates will settle down by 908. Let's just start with some of the individual stock check. I want to pull up HDFC Bank. Remember that's the heavyweight with almost 11% weightage on Nifty, with a bit of miss on the earnings front. Probably, let's see, there could be a negative reaction or not. Remember, provisions for higher for HDFC Bank for this quarter, so that's showing just about a positive start, but these rates will settle down. The other one to watch out will be from the paint companies. Pull up stocks like Asian Paints, Kansai Nerolac. They will be reacting to the GST revision. Asian Paints in the pre-opening session is showing an uptick of nearly 2%. Kansai Nerolac also showing an uptick of nearly 1.5%. Among the Nifty constituents right now, Asian Paints is the leader. ITC, remember, no mention of compensation cess for the cigarette industry was mentioned, so that's temporarily viewed as a positive for the company. So that's showing an uptick of 2%. Vedanta up almost 1.5%. Tata Motors up 1% in trade. On the flip side, you've got stocks like State Bank of India, L&T, HDFC Bank right now, which is showing mild bit of red tick. I just want to pull up Bajaj Auto. Let's not forget the stock was down 8% on Friday on back of numbers. Let's see what sort of a pre-opening session we're seeing there. So 2839 right now. So just a flat opening with regard to Bajaj Auto.
The HDFC Bank is interesting. You don't usually see the bank start lower and stay lower. In the pre-open session was about 2.5, now about 1.7, so all over the place. Let's wait and watch what happens there. Navneet already marked the paint companies, but just want to revisit Berger, Kansai and Shalimar. Remember, the consensus view across brokerages is that paint companies will certainly benefit out of what's happened. Let's wait and watch. Berger Paints has already told Bloomberg Quint that they will pass on the rate cut about 10% to the consumers as is, so maybe it brings in some benefits there. Couple of other names, though I'm sure Navneet marked Bata India, but just want to revisit that once again because the numbers look fairly solid. Let's wait and watch. 3.5%. Bandhan Bank, 3M India and HEG are amongst companies that hit fresh highs in Friday's session. Let's see what's happening there. Last but not the least, Jubilant Foodworks and SpiceJet. There's some positive news for SpiceJet that has come in terms of the case. Let's wait and watch if SpiceJet is reacting positively. Boy, is that a positive reaction, 7.5% for SpiceJet. So good going out here. Soumya Sarkar joins in with the top brokerage calls for the day. But Soumya, just a quick perspective before we talk about the brokerage calls, a word on SpiceJet as well. Did you have a chance to speak to any analysts? What did they say about this reaction, or what about the outcome that has come out?
So the outcome is definitely in favor of SpiceJet. If you see, they have already deposited this amount of 579 crore that they have to pay. But the positive thing is that there won't be any dilution of shares because they did not to give any more equity shares to the earlier promoters. So that's a positive news that has come in. When it comes to the deposit amount that they need to pay to the earlier promoter, they have already deposited that with the court, and that's that will be get deducted from that amount, and they'll have to pay that to the earlier promoter. Other than that, there's no additional amount that the company has to pay, and there won't be any share dilution so far for the company.
I think that's probably one big thing, no equity dilution that we'll see from SpiceJet's end. Okay, Soumya, thanks for putting that into perspective. We'll take in Sameer's view on that as well. But Soumya, while you're with us, the top brokerage calls for the morning.
On the big brokerage calls, first we have is ICICI Direct on ABB India. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 1,400. Now according to the brokerage, capital expenditure in the power transmission and distribution segment, smart grid solution, railways give a good revenue visibility for the company. Along with this, industry solutions, renewables, e-car segment would also lead to new growth opportunities for the company going forward. Now the company's strong competency and technology leadership, proven expertise in execution, healthy balance sheet and a large anticipated capital expenditure spends would drive growth for the company going forward, according to the brokerage. Now the brokerage is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 14%, 20.5% and 21% over calendar year 2017 to 2019. And lastly, the brokerage says that ABB will continue to trade at a premium multiple due to its strong technical capabilities. Second we have is UBS on Petronet LNG. Now the brokerage has raised the rating on this stock to buy from sale and have raised the target price to 245 from 235. Now strong LNG imports to India is driving the short-term outlook, according to the brokerage. Now year to date, if you see, the share prices of Petronet have declined by close to 20%, and now the brokerage believes that this factors in the low utilization level that the street was expecting. Now the brokerage also says that the strong utilization rates and the 5% increase in regasification tariffs would drive the financial year 2019 earnings for the company. And lastly, the key triggers for Petronet LNG would be the delay in commissioning of Mundra terminal and a faster commissioning of GAIL India's Kochi-Mangalore pipeline would be the key triggers to watch out for Petronet LNG.
All right, Soumya, thanks a lot for bringing those big brokerage calls for the day. But as of now, if I look at the top gainer in Nifty in the pre-opening session, and that's UPL. So let's talk about that big deal with Sameer. If I can steal a line from Motilal Oswal's report, is it a good seed for a good crop? It's going to deleverage the balance sheet because of the higher $3 billion debt they take on the books. But looking at the positive, the synergies, the management has mentioned they're expecting some 100 to 120 million right in the first year. Yeah. Do you think in the long run the deal will be EPS accretive for UPL?
I don't know about that. I know one thing, that this will be a really big either a make or a break for the company, because they have digested the smaller acquisitions very nicely. So maybe that has given a confidence to, you know, go for a bigger task and, you know, have a bigger play globally. Now what you've achieved domestically, you want to replicate it in a global sense and cement your positions. So now that has happened, and $3 billion come in additional debt for this kind of deal. Even if you have 100 million synergy coming in, that's $100 million cash flow. Right. Right. That is not even the interest payments for the first year. So the cash flow generates.
But they'll also be getting additional EBITDA from the deal.
Yeah,
right?
and I think the interest payments too are
4.5%.
Yeah, it's slightly above LIBOR.
See, the only point is, if you see the whole system, you have to pay for the acquisition, right, in the longer term. Now, when you're not taking the debt out of the Austria, so you're getting a benefit out of not having that debt of the firm. So you're taking a $3 billion for the acquisitions. So that's the only debt
so
which
the firm doesn't have any debt,
yeah.
It's just for acquisition.
So the acquisition which you get on the consolidated basis. Right. Now your debt to EBITDA goes from 1 to 4.5. Now my only concern is, now here onwards, how well you synergize and how quickly you generate the cash flow is the watchable thing For me, the P&L and the EPS accretion is not that important. For me, the cash flow generation out of the whole consolidation is much more important. Because if you're not able to generate that speed of cash flows, you are net paying off every year additionally for that acquisition.
So you don't believe the concern is in the price?
I don't think so, because even if you see now the book of UPL standalone, it's the receivables and inventories are going way up. So earlier they used to be around 75 days of inventory and 80 days of receivables. Now they've stretched to around 90 days of inventories and 95 days of receivables. So working capital is already blowing up without this kind of acquisition taking place. Now whether it further goes down and the cash flow generation really deteriorates, that I would really be cautious on.
Interesting. Well, let's wait and watch from a perspective of a shareholder who's already invested in UPL. Maybe too late to get out. The inkling of this deal came in about a week, 10 days back when we put out that copy as well. Post that too, the stock corrected a bit. And if you just look at this year's performance of UPL, you'll get to know what I'm talking about. It's arguably amongst the Nifty companies that has performed the worst, 24% in this year alone. Let's wait and watch if there is more in store or no. Actually, just from a trading perspective, Ruchit, a UPL, a bit of a bounce from the near 52-week lows. What do you do here?
As of now, no, this would just be seen as a pullback move, because there is a low top, low bottom structure, and on the weekly or the daily charts, there are no signs of trend reversal. So I think any kind of up move would get arrested around 590 to 600 range, because that's a 20 DMA resistance for the stock. So I won't be much excited to go long post a gap up opening in this. In fact, around 590, 600 comes, then existing longs should review this stock to exit if it's a short-term trading position.
Hadrien, what do you do with something like Bajaj Auto? Let's say if somebody had carried forward their short positions of Friday, what should be the target now?
Yeah, so it is almost closed near the day's low, on Friday, and also closed below its 200-day moving average. So that's not a good sign. But I think after such a huge move on the downside, I think we could see a small pullback. So if traders who were short on Friday, they're looking, to book profits today, I think they might just see, a slight up move before we see further downside. So I think on the upside, again, resistance would be close to the 2920 levels. Post that, I think again the downside would start. I think Friday's low should be the levels where one could actually consider booking profits if they're short.
Okay, interesting. Just minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, ACC, Delta Corp, Granules India, Hindustan Zinc and United Spirits are amongst the companies that are set to report their quarterly numbers today.
Consumer durables, footwear and paint stocks will be in focus today as GST Council cut rates on a number of goods in the 28% slab.
UPL will acquire agri-pesticides maker Arysta Life Science in a $4.2 billion all-cash deal. This will create one of the world's largest crop protection companies.
Among companies which reported their numbers over the weekend, Wipro, Bata, Just Dial, L&T Finance and MCX reported strong set of numbers.
And HDFC Bank, South Indian Bank and Reliance Power are amongst companies that came out with a weak set of numbers in the first quarter.
And in brokerage calls, UBS upgrades Petronet to buy from sell and hikes target price to 245 from 235. Strong LNG imports aid the company's outlook.
Well, interesting. Not too much of a reaction on Petronet. Let's see. The Bloomberg terminal indicated an early buy signal. Nothing too much otherwise. Samir, your banks, mid-size, small-size banks are doing a chalk and cheese performance. DCB was a case in point, Federal Bank was a case in point and the reactions thereof, and now South Indian Bank a case in point as well. What do you like from amongst these mid-size, small-size banks? I'm leaving RBL out, that's slightly larger, the other ones?
So I think we don't have any positions in the smaller or mid-size banks. Given that the variations in results is just too impactful to hold on for a longer term, and the performances deteriorate, and when they start deteriorating, you don't find exits into even the stock-wise performance of the portfolio. So I think it's better to stay safe with the larger banks. If you're looking for an alpha through a bank, I think again I'll go to a Bandhan Bank where
it's at life eyes, you'll buy it now.
Not
I think it's the
buy
most
right
expensive bank now at
Yeah,
price to
but
book.
the only point is if you see the performance post converting to a bank and listing out, the performances are very stabilized. I would still give it another couple of quarters before buying it. I'm not saying buy it right now and take a long position on it. And see, any which way, if you take a long position, you should be ready for a 30-40% downside any day, because there will be certain crises at certain point of time. Right. So I think Bandhan Bank, given the franchise which they have, what if you see IndusInd Bharat Financial Deal is trying to do, Bandhan somewhere already attains it. They already have that in that system. It's more of the product side they have to launch on the deposit side of it. And if you see the deposit growth, they're getting much more faster than even the other Ujjivan or Equitas, that kind of space. So I think Bandhan has the edge over there. Yeah, I won't agree with the valuations which they have currently. But yeah, if I have to, I'll rather put a SIP into that company and start having a part of a portfolio allocated to it.
Interesting. Also, watch out for the broadband companies, Navneet. We have marked it in the morning. Promoters are now starting to buy. GPTL Hathway promoters bought about 50,000 shares. Hathway doing that preferential allotment to promoters as well. Maybe, just maybe, that's a beaten down horse that is trying to make its way back. Let's wait and watch there.
Yeah, I don't know. There were a lot of news flows with regard to buybacks to stem the price fall. I don't know if it's got to do with the similar lines. But just a minute to go from market to open. So let's get the top trading call from our technical experts. Hadrien, looking at the pre-opening rates, what's your top call for the day?
Yeah, so you've taken away IGL from me, so I'll have to stick to Sun Pharma. You know, the stock is witnessing an inverse head and shoulder pattern breakout, and I think one should capitalize that. One can buy Sun Pharma for the target of 580 and keep a stop loss at 550.
Just very quickly, your top call?
I would recommend to continue the up move of Reliance Industries, and the stock seems to be in an uptrend and high top high bottom structure is still continuing. So go long on Reliance with stop below 1110 from intraday perspective. Target would be around 1155.
Hadrien, I thought you would give a call on IGL, not that one.
Yeah, IGL definitely we already discussed, so I thought I'd give another one that was looking pretty more promising as well. So both IGL and Sun Pharma.
Okay, IGL and Sun Pharma. Hadrien, thanks so much for that. Ruchit, stay on. So much more to talk about. We'll just get in some opening thoughts from you as well. But here's what the markets are doing this Monday morning. Starting off on a flat note, the Nifty Bank has corrected. I believe in some part due to HDFC Bank's move that would have started off slightly lower, and which would have been pulling down the Nifty Bank. But ever so marginally, I think even that would have recovered a little bit, because the index too is just inched up ever so slightly. The Nifty Bank has recovered ever so slightly. The mid caps and the small caps should come up on your screen. Again, a flattish start, about 0.25% for the small cap space. Heat map, and let's see what HDFC Bank is up to. The heavyweight coming out with results, down about a couple of percentage points. Wipro, interestingly, is down 3%. Reliance is down about 1%. So two heavyweights out here which are pulling that pressure on the index, but otherwise it's a tick of green. So the market breadth on the Nifty at least is looking fairly positive. What's gained? Well, Asian Paints, as I said, consensus amongst people that the paint companies would be the principal beneficiaries. That's one started off well. UPL starting off well. ITC, well, no news in a manner of speaking. That's probably good news. ICICI Bank out of numbers this week, about 1% higher. And Bajaj Finserv continues to rise and shine. Another % odd up for Bajaj Finserv in the session today. So that one too is done well. But a fair bit of green on the screen. The two sore spots, one is Wipro, which is now down a whopping 5%, 5.5%, 6% for Wipro. And HDFC Bank about 1.5%. We'll talk about Wipro in moments from now with Sameer. But just highlight a few key pockets of trade before I hand it over to Navneet. Paint companies, cannot highlight them. Asian has done what it has done. Look at the others. Berger 3.5%, Kansai about 3%, Shalimar Paints a big 6% up move that has come into this one. So paint companies certainly the order of the day when it comes to GST beneficiaries. What about some of the others? Could stocks like United Spirits or some of the others be doing well? Firstly, stocks which are close to new highs, at least in Friday's session they hit new highs. As we start off, Bandhan Bank reacts marginally, but the others are flattish in the session today. HEG, in fact, continues to rise and shine. So good going for HEG.
as well. What else? Results. Bata, Just Dial, MCX. MCX not reacting too much, really down about a couple of percentage points. I thought the margin performance looked okay. So did Navneet, but starting off marginally lower. But Bata, good results and a good reaction thereof. Navneet, what are you spotting?
So the consumer durable players, Neeraj. You've got Havells, obviously that would be reacting to the numbers as well, but that stock's opened with gains of nearly 6.5%. IFB Industries is showing a good uptick of nearly 8% in the morning session, and something like PC Jewelers, remember the stock was up 20% on Friday, and there is an additional uptick of almost 10% in today's session. Hathway Cable, Neeraj was mentioning, so that too has opened with gains of almost 4%. Berger Paints, he's already highlighted, and something like Praj Industries, that's up almost 3.5% right now. On the flip side, let's look at the earnings. South Indian Bank reported weak set of numbers. That stock's taken a beating this morning. It's down 14% as we speak. And Wipro, despite of posting better than expected numbers, I believe the stock's taken a big beating. That's down 5% in today's trade. And also MRPL, that's down 1.5% right now. Some of the other earnings among the weak set of numbers, Reliance Power, let's just pull up that one as well and see what's happening with that counter. MRPL is down 1.5%, Power is down almost 0.5%. That's up 0.5% in trade, but a lot of numbers on the good side. Let's just see what are let's just pull up that stock. I think that's going to be in focus this morning. Just Dial has seen an uptick of nearly 2% in today's trade. Paint companies we've highlighted. Pull up Bajaj Auto, that was down 8% on Friday. Let's see if there is any sort of respite this morning for that counter. No, it's down almost by 0.5%. And stocks like Adani Enterprises and also Adani Power, which have been surging in the last 5 to 10 trading sessions. So Adani Enterprises has also seen a positive opening, and Power up almost 0.5% in trade.
UPL now needs 6.5% higher, so big move, beaten down stock, climbing back. But the one talking point would be Wipro, 4.5% down. They met the guidance just about. They guided to what was on expected lines as well. The numbers didn't look out of the ordinary. Starts off 4.5% lower. Quick initial thoughts, Samir. Wipro, more a neglected cousin of the top three, other top three large cap IT names. What did you make of the numbers? What do you make of this reaction? What to do if somebody holds Wipro?
So I think if you're holding Wipro, there can be mainly one instance even now that you're more looking towards the cash generation of the firm initially in the shorter term or a medium term, rather than the upswing coming in the stock prices and the performance. What is happening that TCS and Infosys, TCS especially, is getting aggressive in the deal making. And Wipro is something which is missing that aggression. So the incremental deals or the whatever the new deals are coming to market, they are not able to get even the half of it. So over there, the new business is not helping them out. Secondly, the attrition have slightly come up. There are certain management changes which took place, and there is kind of a structural change happening at Wipro. So I think that will last another 2 to 3 quarters, if not longer. So I think meanwhile you can only have it because it has underperformed the market. So there might be a catch up, or you can go for the dividends and the cash flow generation, which it does. Otherwise, for appreciation in the performance or the operating matrix getting changed, I think that's still a couple or 3 quarters away.
Okay, Symphony is up 5.5% as we speak, and Havells obviously reacting to the GST revision, but also to its earnings. I believe Havells has surged 6.5% to 7% in the opening trade. Samir, any thoughts on Havells and its earnings?
So Havells' earnings came out a little surprise to us because in that, if you remove the Lloyd's performance, Havells was very flattish earning. In a certain sense, all the electrical margins, revenues, the other segments were very flat on the performance basis. On the Lloyd's consumer business, that saw a good sharp improvement even on quarter in terms of revenue and the EBITDA margin on the EBIT on the absolute basis. So I think that is supporting the whole consolidated performance. But I think still on the flatter core business, I would be worried in a certain sense if that stretches the book, the balance sheet itself. because over there it's much more using of working capital and less cash generating. So if it flattens out, the cash generation also flattens out. So Lloyds, if I remove Lloyds, I would rather see another improvement on the core business post Lloyds, and then take a call on whether I'm bullish or bearish on that.
Any chart checks out here? Havells, Symphony, Ruchit, these consumer durable names, they're starting off with a bang. Anything looks good for a trade?
I think Havells, if you see, although the stock is already 6%, but today's gap up opening now would be seen as a breakout gap, since we had seen a consolidation during last week. So 572 now becomes a very important support for Havells. So even at current levels, one can take a trade with stop below 572. Usually when stock goes at all-time highs, then reciprocal retracements of previous corrections are seen for target zones. So the first target, according to that reciprocal retracement theory, is coming around 625 for near term, and from a medium term perspective, I think the stock would head higher towards 680 kind of levels as well.
Okay, and I guess the street's giving a thumbs up to UPL. That's your top gainer, or Nifty right now. But remember, the stock was already beaten down ahead of this news. Hadrien, on the charts, has the stock bottomed out now? What would you do? I think, sorry, Hadrien is not there with us. I'll just take a chart check with Ruchit then on UPL. 7.5% higher. Has it bottomed out now, considering the correction that we had seen in the recent past? Would you create any fresh longs now?
It would be very early to say whether the stock has bottomed out, because this low top, low bottom structure and the underperformance was huge in last 1.5 months. So usually whenever the corrections are very sharp, the pullback moves are also very sharp. The stock has not given a close above its 20 DMA on the daily chart since last many days. So I would wait for a closing above 600 to take any positive view on UPL.
Okay. Stocks which are trading at new highs include Bajaj Finance and a Bajaj Finserv, so a couple of percentage points higher yet again. And it's just amazing, the rally that we've seen in Bajaj Finance. Thursday gained about 6% intraday from the lows. Friday about a 7% move. Today it's starting off about a couple of percentage points higher. And Finserv too, about a couple of percentage points higher. Ruchit, if you had long positions in these companies, Finance and Finserv, would you now take money off the table, or would you continue long?
Niraj, I would not like to continue long position in both these names, because if during last 5-6 months where markets have not, many of the names have shown a corrective move, these are two names which had shown significant outperformance as compared to the broader indices. So I think one should keep a trailing stop loss method and continue to ride this trend unless we see any kind of reversal signs.
Okay, so that's the view coming in on Bajaj Finance. Just want to mark the footwear stocks as well, which are reacting to GST rate revision. Relaxo as well as Liberty both have seen a sharp reaction. Remember, we discussed this with Samir a while back, who did mention the news is more beneficial for companies like Relaxo as well as Liberty right now. But Bata also reacting to its numbers today. So which was your top pick, Samir, Liberty or Relaxo?
Topic in
the
preference
footwear,
wise, I think Relaxo is better off with these kind of cuts helping out them.
And Bata, I mean, we just thought, I mean, forget the GST, but generally otherwise Bata
out of three, as a cash flow generator, I'm always biased towards Bata. But the valuations have stretched out even the cash flow they are generating. So I think any kind of a correction, I'll be more interested in Bata over other two.
But you will wait for a dip?
Yeah, I would.
And therefore, I'm guessing from that answer, you mean to say that you're not going out and initiating any kind of investments into Liberty or Relaxo?
No. Just because of the tax rate.
Yeah.
Okay.
That's interesting.
I think the other one which has gone up is VST Industries on back of no mention of compensation cess in this revision, and neither in the last meeting. Remember, there was no tweaking of rates with the cigarettes. VST Industries is up almost 7.5%. Temporarily, it is positive for players like ITC, but the stock's not been able to move higher.
Yeah, but see, ITC again has that overhang, and it's now taken more like a cash flow generation company rather than the investment into cigarettes business. So I think that flattens out the upside to it. Yeah, on the downside, there's always a negativity over the taxations.
Look at the Adani Group stocks. I think they are consistently featuring in the high-flying candidate list. Not Adani Enterprises today, but Adani Green Energy. That's up about 16% in the session, and that's nudging fresh highs for itself.
And this one was amongst the better performers in Friday's session as well. The last 7-day chart for Adani Green Energy should be interesting. Just bring this stock up on the screen, the 7-day performance, and look at that, 31%. 2 days, it's just had a manic move. So a move all right in the session for this one. Ruchit, the footwear companies and Relaxo in particular, which is up about 4%, would you trade it?
Yes, no, usually the volumes actually is only a concern because on a daily basis we don't generally see very high volumes, but still the trend for the stock is positive. Recently we have also seen a good consolidation phase above its 89 EMA. So one can go long on the Relaxo at current levels. 730 would be the stop loss. So since on a percentage basis it's a bit high, so one needs to adjust quantity according to the risk management, and on the higher side we could see targets around 860 to 880.
Very interesting. So 12 minutes or 13 minutes into trade, Ruchit, if I can ask you to tell us one stock that pops up on your screen which is good for a trade now, or an index trade if you have one.
So in the index front, I think Nifty still continues to remain a buy. Even Bank Nifty have seen, although in the opening trades we had seen some negativity, but it has recovered from those lows. But Nifty looks much stronger. Go long at current levels. Keep a bit positional view of about 1 or 2 weeks. Stop would be 10,920, and we should see the January highs of 11,150 to 170. And among stock specific, Neeraj, paint industries seems to be continuing this positive momentum. Asian Paints has although seen a gap up opening. Stock is up 4%, but from the opening ticks itself, good volumes have started coming in. So I think this momentum is likely to continue. 1500, 1520 could be seen in this week itself before expiry. So one can create long positions in Asian Paints at current levels. 1410 would be stop loss, targets around 1500 to 1520.
Well, let's see if the rate cuts lead to some bit of movement from the unorganized to the organized in the paint space. Ruchit, take a moment to thank you for joining us today and being with us till now. I much appreciate your time. Okay, I know Sameer's answer. He's not buying any of the companies because of what's happened in GST. Let me talk about some result reactions then. Yeah. Bata was one. L&T Finance Holdings, 5% higher.
Yeah.
What do you make of the numbers?
That's a company which is outperforming the expectations, let's say in that sense. Because L&T Finance, earlier when it got listed, there were a lot of negative impacts coming in for it, and
it didn't move at all.
Yeah, that's what. Like so that gives a negative, right? So I think now that whole underperformance or the underweight expectations are being outperformed. So now I think there will be a better side for the L&T Finance to come up, because they focus on the growths and the management getting separated from the, the group and going on their own. Becomes much more higher growth oriented rather than financing the internals first and then going out towards other avenues. So I think now these kind of financing companies will face more competition, but the only worry which I have is the growth is coming at a point where rate hikes are coming in. So it might be just 0.25 right now, but if you see the yields, they've already gone up. So their incremental borrowing also goes up, because they are not that linked to the bank borrowing as compared to the market borrowing. So I think that will pressurize their NIMs going further for all these NBFCs especially. So I think it will be a really tough and not that profitable new loans as they were in past 1.5 years. So I think there is a certain kind of, I can call it a pessimism for myself. Because the rate hikes really don't benefit the NBFCs. They help out banks much more further on the loan growth sides.
Interesting. If I can ask you for one final thought, really. We spoke about some of these stocks in the pre-open session, but South Indian Bank stands out as a sore spot today. 18.5 now, 16% down post its numbers. Just goes to show that these mid-sized banks, even though you might be bullish because of whatever reason, a bad quarter or two can really put paid any kind of gains that you would have had in a year due to some constructive work.
Yeah, see what happens, their balance sheets are very concentrated into a certain number of groups. So their number of accounts are less and their loans per account is higher. So that gives more variation to numbers. So once the accounts start defaulting or the NPAs start increasing, it takes quite a long time to get that rectified. I think that's what happens with corporate lenders and the retail lenders difference. And that's where the premium comes to the retail lenders than a corporate lender.
Yeah, well, it's showing 16.5% of need for South Indian Bank. It reminds me of the kind of reaction that we saw in DCB, actually more pronounced than DCB as well, to be honest. But DCB numbers didn't look as bad as South Indian Banks did.
That's right. I think it's a major reaction that one is seen for South Indian Bank. Just one Nifty stock I want to talk about is Bajaj Auto. Soumya, just extending this conversation a little bit. Stock was down on Friday. It's down another 2.5%. It is, I guess, the cheapest, not the cheapest stock, but cheaper compared to iShares and TVS, if I'm not mistaken.
So we have a holding in Bajaj Auto, and we've been buying in smaller chunks.
So are you buying at lower levels?
Yeah, so we're limiting our buying to around 2,800. That's where we limit itself. The lowest has been 2,700. Let's say in that set itself. What happens when Bajaj Auto earlier was not giving the volume growth? That was the worry. Now, for us, volume growth is the major player for auto players, because right now they were losing market share to Honda, which I think was the main focus for them now. And next 2 quarters, they want to achieve and surpass that in the bike segment. So I think that addressing that market is much more positive for us, rather than the margin being a little less this quarter or not meeting the expectations. So I think on a longer term basis, Bajaj Auto, if the volume growth sustains for next 2-3 quarters, will outperform, because there's a lot of negativity into the margins. And because see, when your raw material increases throughout the auto sector, it will get affected. It's not the Bajaj Auto only standalone will get much more affected. Even the Hero Honda or the Honda of the world will get affected. So I think the 3-wheeler and the quarterly cycle, which is going to be notified soon, I think these triggers are much more bigger for Bajaj Auto than other listed 2-wheeler firm which is there.
Well, we'll get to know. So, I mean, we're out of time completely, but just a quick 10-second answer if you can. Do you track Rain Industries? A lot of queries around that. No. You don't track Rain Industries. Nevertheless, we'll probably try and get that question answered on Ask PQ as well. Sure. Soumya, thanks so much for joining us and giving us that perspective. Really appreciate your time. Take a quick break on the note that the Nifty Bank is lying absolutely flat, maybe weighed down by HDFC Bank, but the broader markets, or the Nifty and the Sensex, about 1/3% higher. The GST cuts, the big beneficiaries. Navneet was speaking about how consumer durables is the order of the morning. We'll talk about the boost with Vijay Sales. Nilesh Gupta joins in to talk about what kind of uptick could we see on the consumer durable space, and discuss the June quarter earnings for L&T Finance with Managing Director Dinanath Dubhashi.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
They're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're with us on Indian Open, and the biggest news over the weekend has been the GST rate cuts. From paint companies to consumer durables, bunch of companies would benefit. I think consumer good companies have gotten a shot in the arm from the GST Council for sure. The rates have been brought down on more than 50 items. Retailers also stand to gain from this price drop, as sales are expected to only get another fillip. Joining us to talk about the impact of the tax cut is Nilesh Gupta, Managing Partner at Vijay Sales. And Nilesh, good morning and thank you so much for joining in.
Good morning.
But the whole conversation is not just about the impact that it has on retail, but for the consumer good companies as well. Because if I am to understand from what you told us on Saturday, that the growth numbers hitherto until the YTD, or at least in the financial year, haven't been particularly great. Do you believe that this could give the much needed fillip?
I think it's a very much needed fillip which the industry needed, because this year has been truly not a very great year. In fact, I can say a bad year also. If you see air conditioning season, air conditioners didn't pick up because the season was not great. Right from April, May, we had monsoon rains coming in. And even the refrigerators and televisions didn't pick up so much. So we have had a very low year this year. But looking at the announcement what the government has made, I think it's amazing, and we expect good growth in the coming months. And especially we have a season ahead in October, November, so I think it's a very great thing.
Okay, interesting. So do you, I mean, you would have a pulse of how the Indian consumer behaves. Would you believe that, somebody was making this point early in the morning that consumer durables are not things that I can buy and store because the rates have come off. I would buy it when the need arises. But do tax filips leading to price filips like these given an immediate uptick to sales, or is it that people who would have been on the border of whether to buy or not to buy would then go out and buy it, and therefore the reaction may not be immediate, but it will be more pronounced during the course of the year?
See, the thing is, consumers, as far as consumers concerned, what is you are saying is right. When they need it, they'll buy it. But what happens is when such a flip comes, a 10% is a big number. So all the entire industry will gear up together. They'll start advertising. Everybody will be in a gung-ho mode. And today, if you see in the metros, most of the consumers are the ones who are going to go on exchange basis. So there definitely we'll be able to give much better prices. And I think the push is there. And overall the sentiment will be good. And another thing which we have to see is it's a very positive movement from the government. So looking at the positivity, I think the sales overall will grow, not only from our segment, but even otherwise. Consumerism will once again come in.
Okay. YTD, you mentioned that because of the abnormal monsoon or off-monsoon showers, etc., air conditions didn't pick up. Probably refrigerators would not have picked up as much. Was there any consumer durable segment, to your mind, which has done reasonably well until now, or by and large, it's been under a cloud?
I think not in consumer durable, but mobiles have done pretty well. I think that's the only positive sign which we see in the industry. Otherwise, televisions has also been struggling. And here, I think I'm being a little bit more greedy, and they'll always mange more. In television, the government has done only on the 24 inches, which is just 5% of the entire segment. So I would hope in the next GST Council, they cover the entire LED televisions from 28 to 18%.
Okay, interesting. Maybe the belief is that northwards of 24% is not an essential commodity, but a luxury commodity, therefore keep the tax as is. Okay, we've seen almost the culmination of a fairly month and a half long sale season as well, I believe, across the board in pockets that you go to, whether it's clothes or consumer durables. There was a sale period which was on. I don't know if it's shut now or no, but probably coming to an end. Did that also fail to revive spirits? And therefore, part two of my question would be, if you were anyways getting a 15, 20, 25% discount in the last 1.5 months across the country, and if that did not revive sentiment or demand, why would a 10% cut in tax do that?
See, again, I'm repeating. What happens is it's not only the consumer dividing the consumer coming to the store. The entire industry was in a pall of gloom. 28% is too high, too high. Now, at least two major segments, refrigerators and washing machines, coming in 18%. If you go to see, it is lower than what we used to pay during the excise and VAT regime, slightly lower than that. I think that will fuel the growth, because now consumer durable companies will get into action. They will start advertising more, and that's all. I think overall, as I said again, the consumer sentiment is going to go positive, and that's going to bring the consumer back. Today in consumer durable business, I think sentiment is what is most important, because as it is, they are not bothered about price so much, because they are all 80% of the business is happening on the EMIs. So EMI, even if a 2,000 drop happens or 2,000 increase happens, the EMI difference is going to be 200-300 rupees a month. So that doesn't matter. But what matters is the positivity in the air.
Okay, interesting. So two questions now. One is from a perspective of a consumer durables company. I think you told us on Friday that you believe that sales growth, which was in lower single digits or extremely 0 to 5% or thereabouts, could nudge the 8 to 10% mark. I would reckon that would be true for another 8 months, because we've already seen 4 months of the current fiscal go. Would you believe that on an average for the next 8 months, an 8 to 10% is a near certainty on an average?
I think so. We should see a 8 to 10% surge in the next 8 to 10 months. Definitely should happen.
And this would, you would presume this would be across buckets of consumer products, not just consumer durables?
Across the bucket. Even where the price has not come down, I think the positivity will bring in the customer.
Okay. You would have seen a lot of past trends as well, Nilesh. When moves like these happen, one, the offtake that happens as a result of either online buying or offline buying. Two, the quantum of footfalls that tend to come into the retail space, be it malls, be it large format stores like yours. Does this have the wherewithal to increase footfalls as well? I know this is monsoon, so this may not be the right time, but post-monsoon, as you said, we're gearing up for the festive season starting September as well. Does this have the wherewithal to bring in footfalls as well? Or what footfalls anyways there, but the conversions were not happening? What is that consumer behavior?
I think it will definitely, this is a precursor to the season which we are going to see. So I think everybody will get more prepared, they'll get more energized, and we'll definitely see an uptake on the footfalls and a bigger uptake on the conversions as well.
Okay. What happens to margins for retailers like yours? I can understand consumer durable companies or paint companies, for example, they will simply pass it on. In fact, we had a couple of companies already on record saying, paint companies, for example, that their entire cut will be passed on to the consumer. So for them, it's probably a net neutral on the margin front, but for the fact that the capacity utilization levels might go up because of higher demand. What does it mean for a retailer like you or any such in your format?
See, it is going to be a net neutral on margin front for our industry also, because we were not doing well. So there's no reason why any brand will try to keep a margin and then pass on a lesser credit to the consumer, because at the end of the day, more you sell, the more you're going to earn. So I would not be surprised if some 1 or 2 brands may get more aggressive and instead of 10 may pass on 12 also.
Oh, very interesting. One last question from mine, or maybe a last couple of questions, Nilesh. Do you sense in conversations that might be happening from the industry body to the government or otherwise, that while a large move like this has been taken on consumer space, there could be more in the offing? Because I heard you mention at the start of the interaction with the Dil Mange more, and maybe in television you would expect the higher size TVs to also get in. Now, would large buckets already have been taken care of, or would you believe that some more need to be done and could be done? Is the industry actively talking to the government for the same?
Yes, I think the industry is actively talking, and I think now 2 major demands would be there. One is on air conditioners, to bring it back from 28 to 18. And the second would be on televisions. I can understand at least till 40 inches, we should get it on the 18% bracket. Maybe 55 and above, the government may think it's luxury. So let's keep it on the 28%. But up to 40, I think it's no longer a luxury.
Interesting. And on air conditioners as well, is there active conversation going on? I mean, you know, one more reason why I ask this is that while air conditioners probably don't fall in the bucket of or at least to my mind, don't fall in the bucket of the big beneficiaries from unorganized to organized as much as, say, maybe air coolers, because that's a very large unorganized industry which is still thriving. But maybe in ACs, that was not the case because it is more a technical product. For paint, the question that I'm trying to ask is, for paint companies, the managements have said that aside of the fillip that comes on pricing, there is also a fillip that comes in because now that the prices are so much competitive with the unorganized space, the move from unorganized to organized happens in a big way. I doubt that the same holds true for consumer durables by and large, say for maybe air coolers.
In fact, consumer durables has actually moved from unorganized to organized.
Completely already.
Completely. Air coolers also, if you see, now it's more or less organized. Maybe in small pockets, small towns and all, you may be having small guys. Because see, ultimately what has happened is people are now looking out for brands. And because of the economy of scale, the branded products are, there's not much of a difference between a branded and unbranded product. I think if you ask me, the branded and unbranded is the small appliances, I think, which is going to take the hit. Because small appliances are still a lot of unbranded, unorganized sector. Now, I think that's already, after the GST coming in, has taken a hit. And with the rationalization of the price in mixers and irons, and one more category they put in small appliances, I think that will further get hit. And the things will move from unorganized to organized totally.
Okay. I wouldn't ask you to stick your neck out and tell me which segment will see the biggest flip. I do hope that all of them do. But really appreciate you joining us and giving us this perspective. And all the best. If sales pick up for you, it will only mean better discounts for consumers like us.
Definitely.
So we hope for that as well. But thank you so much for taking the time out and speaking with us.
Right. Thank you.
Well, that's a company and that's a man who's got his pulse on the consumer behavior. For years, they've been retailing at the forefront of the Indian retail space and the consumer durable pocket, believing that this could give a much needed fillip to consumer durable sales. That's Vijay Sales for you. Thank you so much for watching that piece. On to the next conversation, and that's L&T Finance, which has witnessed a 71% jump in its June quarter profits. Implementation of Ind AS resulted in higher tax expense. What are the other key highlights of the quarter gone by? Let's ask the management. Joining us now is the Managing Director and Chief Executive Officer, Dinanath Dubhashi. Also, Shraddha Babla from our research team, Johnson, to take the conversation forward. Shraddha, over to you.
Very good morning, sir. How much of loans have you sold down in the first quarter in your wholesale book?
See, sell down is just a mere small part of the overall strategy that we have, and you know we have continued our sell down engine quite well. Total sell down, I think our investor presentation talks is about around 5,500 crores. The important part is not that. What it shows is we are going ahead on our strategy of maintaining steady growth of the portfolio. So we have shown about 27% growth. Our strategy of retailization of the portfolio, that is where the sell down is important, that we book wholesale assets and sell it down, and hence the assets mix moves to retail. Our strategy of maintaining our NIMs plus fees at a good level. So our NIMs plus fees have increased from about 5.7 to about 6.6%, and then maintaining cost control quite tightly. Our cost to income is now at around 23%. And last but not the least, continuously improving asset quality. So all these factors, and not only the sell down engine, is responsible for this increase in ROE now to about 18.45%, and the increase in PAT that you are seeing of 71%. So that's really the whole picture.
Okay, your gross NPA, that is your gross stage 3, has come in at 7.93% in this quarter. Where do you see this number by FY19 end?
So it is important to understand the difference between gross stage 3 and gross NPA. It is not the same thing, right? We have moved to Ind AS, and Ind AS gives us the opportunity not only to classify greater than 90 days as NPA, but also assets which are standard today, less than 90 days, but where we see stress, right? So it includes all this S4A, SDR, etc., plus also standard assets where we see stress. And our entire, this incipient stress portfolio of our legacy assets, which we had always said is about 5,000 crores. These are not all NPAs, even just about 50% of NPAs. But all of that we have classified as stage 3. So the important part is, as we are moving to Ind AS, we have actually identified the whole stress in the legacy infra book as stage 3. So that's number one. Number two is on the provisions of this. On this 5,000 crores, we had said that to resolve this 5,000 crores, to take haircuts on this 5,000 crores, we may require about 3,000 crores of provision. Over the last 2 years, we had provided about 1,200 crores of it. Today, and we had also said that we may require about 1,800 crores more to provide this to the completely required level. What we have done is, as we have moved to Ind AS, taken that entire 1,800 crores of provision through opening reserves. What it means really in simple language is not only the entire stress in infra is recognized and put in stage 3, but also the provisions required on them has been taken. So very simply to answer your question, from here onwards, both the gross as well as net stage 3 should only reduce, because the entire stress on the portfolio. So retail, of course, all the stage 3 has been taken. Wholesale, all the NPAs have been taken as stage 3, but also non-NPAs have been included in stage 3 and provided for. So these ratios will only trend downwards quarter on quarter from here.
All right, so then what is the mood and demand trends like in rural India? And also if you could tell us which of your rural product segments have done well in this quarter?
So all our 3 rural segments, which is farm, two-wheelers and micro loans, have done extremely well. Generally speaking, rural India is doing well. Generally speaking, monsoons are expected to be quite good. With the rise in MSPs, the cash in the hand of farmers is supposed to be quite good. Generally, all the indicators are positive. Okay? But what we do is not just depend on it. Microeconomic indicators, market is very important. But we like to outperform the market every time, both on market share as well as asset quality. What we do there is study at micro level, at taluka level, various factors, put them through our analytics engine and take very detailed decisions on manning, concentration on collection efforts, which market to grow, which asset to grow, and that has led to continuous outperformance of the rural market and this improvement in rural NPAs. And if you would have seen my investor presentation, my net stage 3 on rural is down to 1.75%. So that's very, very commendable improvement on asset quality coupled with the growth that is happening in rural. So to answer your question very simply, good growth is happening on all the segments. One note of caution that I would put here is the base is last year Q1, where we are not completely recovered from the aftermath of demonetization. So this kind of growth you will not see. The growth will be more modest but quite strong going ahead.
Right, specifically with respect to your housing finance business, how have the NPAs in the LAP and builder financing book moved in this quarter?
So as you have seen, the asset quality is quite steady. I will talk about both LAP and builder financing separately. LAP, we believe that the risk profile in the market is not quite good. The SME sector is under some stress and the market, even LTVs, etc. are going up. So we are slowing down our LAP business, most definitely being very selective in doing LAP. As far as builder financing is concerned, our strategy of completely concentrating on only the large builders, A category builders, is playing out well. We are concentrating largely on A category builders and giving them a whole suite of products that has played out very well. And there is, our portfolio is doing pretty well and absolutely clean. So that's where we believe that we use our group synergies well to create a differentiated offering and monitoring mechanism in the builder financing portfolio.
Right, rural and housing businesses, I believe now together constitute about 46% of your total portfolio as compared to 35% last year. So say over the next 2 years, how do you expect the share to move as you move towards retailization of your portfolio?
So it has improved from 35% to 46% in 1 year. So you can make your own guesses. It will all be a function of how growths in various businesses happen. But largely, I think both these businesses together, our target, and I don't know whether it will happen by 2020 or 2021. I don't want to give such short-term guidances. But our target is normally these 3 businesses should be 1/3, 1/3, 1/3. Why that is, we like all the 3 businesses. We believe that all the 3 businesses are very profitable. But in a good diversified company, they should be balanced well. And generally speaking, we will guide the portfolio towards about 1/3, 1/3, 1/3.
All right, and what is the current scenario like with respect to the wholesale financing segment? If you could give us some updates there, and also do you expect ROEs to continue to remain in the single digit for the wholesale finance business?
my investor presentation is already uploaded. So you will see now that these ROEs which were in single digits, we were always saying that this ROE is single digit because we are taking this accelerated provision for our legacy portfolio. Now that, as I said, the legacy portfolio is already provided for, and hence the ROE for wholesale is already at 15.6%. So we believe that this is a business capable of producing between 15 to 17% ROE, and we expect those ROEs to be there.
And so lastly, if you could leave us with some guidance for the AUM growth that you're targeting for FY19.
So book size, consolidated book size, we are expecting between 20 to 25% growth, which we believe is sustainable over the next 2 to 3 years.
All right, Mr. Dubhashi, thank you very much for speaking with Bloomberg Quint. Neeraj, that's back to you. Asset quality expected to improve from here onwards, but growth could look slightly modest on account of the high base of last year, but the stock doing fairly well today.
Yeah, I mean, maybe keeping things clean, and that's working for the stock as well. Shraddha, thanks for getting us up to speed with what the management had to say. The stock is doing reasonably okay. What is not, just before we wrap up this leg of Indian Open, is two stocks. South Indian Bank and Take Solutions. Take Solutions is down 20%. South Indian Bank is down 18%. 28 million shares traded. By the way, the volumes are much higher than the 10-day average for sure. But Take Solutions is down 20%. It started off 4-5% lower, and then it's been beaten down. I remember a conversation with the management when the stock was at 265. And from there, this year, the stock has come off now to 171. That's a strong hammering that the company has taken. This year, from the peak, the stock is down substantially, actually close to 300, and from there to 171. So that's almost a 40-45% downtick on the stock, YTD. But more importantly, more concerning is the kind of move that we've seen today, down about 20%. We'll talk more about this during the course, because time out on this leg of Indian Open for sure. But the FNO show, Ask BQ, and all of the other stocks will take, all of the other shows will take forward queries from viewers as well. And we'll talk about all of the key movers. Thanks so much for watching this leg of Indian Open.